please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Markets holding firm. So it's a gain of close to about 90 points in the Nifty. Sensex higher by close to about 270 points. ICICI Bank has seen a recovery of nearly 2% from the low point of the day. IT is going strong. Tech Mahindra recouping some of its losses. And FMCG names, both HUL and ITC, are showing you gains to the tune of close to about 1.5%. It's time now to talk about market technicals and trades. Ashwani Gujral and Prakash Gaba join us on the show now. So far, so good. Ashwani, the Bank Nifty is lagging a bit. Your thoughts on the day so far?
See, in my view, ICICI Bank has made a bottom today. 265, 270 should hold on. It should have a big day, maybe 4 to 5% style rally, because it's come down to this 260, 265, I think 3 times. And 3 times it's gone back. And now, the triggers are there where, the market can look forward from the entire issue. So that way, today is a long-term buy on ICICI Bank and even for the end of the day. And as we go into European Open, chances are that the market short covering will pick up. And because of ICICI Bank, other private sector banks will also tend to participate. So this lagging impact of, the Bank Nifty may actually recover quite a bit. Having said that, today is the day when you buy the weakest stocks because they tend to give you the biggest bounce. So REC is a buy with a stop of 103, target of 110. BEL is a buy with a stop of 104, target of 116. And Chola Mandalam is a buy with a stop of 1500, target of 1610.
Ashwani, what are the resistance levels on the Nifty?
See, a rally all the way up to, say, 10,700 thereabouts is easily possible. But if the banks also start to participate, then, we are basically getting back into the range from which we broke down. So that way the market looks like, it should have fairly strong closing.
All right, just keep an eye out on the 50 DMA that comes at around 10,689 approximately. We're just 5 points away from that particular level. And even in terms of options, if you pull up the 10,600 put, if you can get that up, you'll see that has added nearly around 10 lakh shares. In an uptrending market, you would like the nearest put to you to see some kind of addition. And in all probability, the smarter money is looking at writing that particular strike because the premium out there is around 109 rupees. So the 10,600 put should be up for you at some point of time as well. Prakash, what about you? What's your trade on the Nifty?
I feel that Nifty can climb up from here. It's open to the gap up and is actually gaining on its strength. So far, no sign of weakness. It can climb up to where? I think it can climb up higher to maybe around this 10,700 zones. Bank Nifty is lagging, but looks like there is strength in Bank Nifty as well. Once it goes to 26,500, that's the level I have. It goes to 26,500. I think it can even go to 26,600. That's a possibility. So far, looks like a base formation on Bank Nifty as well. I have 2 stocks. I'll start going with ITC. That certainly looks good to me. The way it's trading looks like ITC can climb to around 268 to 272 zones. It's a matter of time. Stop below 262 should be fine. ITC already gone up, so I think it's 282 zones. ITC can climb to 282 zones. Tata Elxsi is another stock that looks good to me, and the way it's trading looks like it can climb to levels close to 1340, stop below 1300.
Okay. Gentlemen, thank you very much for your trade. Let's get the early rates of European markets up for you on your screen in the green right now. So the CAC is higher by close to about 1.4%. The German index has seen a rally of nearly about 1.2%, so joining the overall optimism seen across the global markets. That said, despite the up move that you're seeing in today's trade, most of them are likely to end the week with cuts. So the DAX is showing a cut of close to about 2% for the week, including the gains that we're seeing today, while the CAC too could be marginally in the red. But let's get you a CNBC TV 18 exclusive now. Reddy's GVK Power is acting fast on monetizing its airport assets. Sources tell CNBC TV 18 that the company now plans to sell a minority stake to investors. Could the nervousness in the market be causing a rethink on the IPO? Nisha Podar gets us these exclusive details. Nisha?
Thanks for that, Rima. Yes, so sources with direct knowledge share with us that instead of going for an IPO now, they have launched a sale process for a significant minority stake in the airports division of the company. Now, remember that this particular division owns and operates the Mumbai airport, also has backed the Navi Mumbai airport recently, and also with it comes the entire real estate development that will come with the airports being backed by the company. So GVK Airports Developers is that particular holding company in which they are looking at selling a significant minority, and sources suggest that they have even hired an investment bank for taking this particular sale process forward. So a lot of prospective buyers and interested parties have been reached out. We do gather that some of the international airports who have looked at Indian assets in the past, like Changi Airport as well as Paris Airport, ADB, could be interested. Apart from that, Canadian pension funds like Fairfax also from Canada have invested in the airports division in India earlier and could be looking at it, and also some of the private equity players. So there are a whole gamut of suitors which could be lining up really for this particular asset. But the main important bit is that GVK really is looking at monetizing these assets at the earliest so that they can reduce the overall debt burden on the company. So that's the most important bit, which the lenders will also find a lot of solace from.
Okay, all right, Nisha, thanks so much for that. We'll keep an eye out on that story. The stock is locked in upper circuit with pending buy orders as well as we speak. Just take a look at that. Intraday, it's seen a bit of an upper circuit. But keep an eye out on the broader markets as well. Some of these aviation stocks, something like an Interglobe Aviation, a Jet Airways, pull up the intraday charts. Remember, those stocks were sitting with cuts of around 2–2.5%. From those lows, you've seen big volume, big price action out there. Even Jet Airways should come up for you on the screen. Sharp spike is what we're seeing on that one as well. But we'll slip into a short break. On the other side, as the first half of the year comes to an end, we'll tell you how the markets have fared in this first half. Stay with us. Well, it's almost a 100-point gain on the Nifty as we speak. We are moving towards, in fact, the Nifty has hit the 50 DMA. So let's pull that up for you as well. The intraday high is at around 10,689. And that's the mark, in fact, that the Nifty just hit as well. A few stocks that moved high in the last few minutes. You have Bharti Infratel. That stock has seen a bit of a spike. Axis Bank as well as ICICI Bank, both of them have moved higher. And even HUL, that stock as well has moved high in the last few minutes. Volumes as well picking up out there. So keep an eye out on the 50 DMA. The Nifty is flirting with that level. We're just 3–4 points away from that level. But the metal index, that's doing quite well. Remember, stocks like Nalco hit 52-week lows earlier this week. The stock has lost nearly around 35% from its November highs. In fact, earlier today, we spoke with the management of Nalco to get the sense of what exactly is the price outlook for alumina as well as aluminium for the remainder of this year. Let's listen in.
If we look at the aluminium market, that also will have a very, particularly in Q3 of 2018, aluminium market may have a deficit of around 2 to 3 lakh ton, and with continued farm of the price of alumina around 450 to 480, 490, and also carbon prices like city coke and calcined petrocoke. So we expect that the aluminium prices will move somewhere between 2150 to 2250. In case of aluminium, the average realization is 2,300 plus, including the premium of 90. So with a moderation of 20% increase in input cost, we have calculated that our EBITDA margin will be somewhere around 31%, and the PAT is almost going to be more than doubled.
Okay, all right, let's focus on a couple of these ID stocks. Tech Mahindra, that stock in fact has been one of the biggest gainers in this year itself. However, in the last couple of days, there has been some kind of nervousness on that stock. The market fears for a weak first quarter for Tech Mahindra. Rima is with us. Rima, fill us in with details.
Yes, the market is fearing that the start for FY19 is going to be weaker than what they had earlier anticipated. So what they're pricing in right now is that their constant currency revenue will decline by nearly 1% on a quarter-on-quarter basis. There will be a significant amount of cross-currency headwinds on account of the dollar strength. So that could be to the tune of 130 basis points, and margins will decline by 100 to 150 basis points on a quarter-on-quarter basis in Q1. Margins will be impacted on account of wage hike as well as the visa cost. Also, as the company had earlier indicated, that Q1 is a seasonally weak quarter for Comviva. So apart from Q1 numbers, as you rightly pointed out, the stock had seen a huge run-up, and as a result of which its valuations were significantly higher than its peers. So it was trading at a 20% premium to peers like a Wipro as well as HCL Technology. If you exclude this 10% fall that the stock has seen, 9-10% fall in the last 2 days, just till the 27th of this month, the stock was up close to about 40-odd%. And on a side note, the current CEO, CP Gurnani, had sold shares just in the month of June, from 4th June to 14th June at a price which is very close to 700 rupees. So usually when, the CEO sells, it, people fear that, it could be the peak for the stock or something. So from 4th June to 14th June, the CEO had sold close to about, I think, 175,000 shares. Roughly, I'll, get the exact number, but there was some selling there.
Okay, all right. So that could be some concern on that particular stock as we speak. The Nifty, though, is holding at the high point of the day. Keep an eye on a couple of these stocks in the broader markets. Zen Technologies, the stock has been in lower circuit for the last couple of trading sessions. If you just pull it up, Zen Technologies, it's been admitted in the ASM. But I'm looking at the exchange, and they're meeting a whole host of funds today as well as yesterday. GMO, IIFL, SBI Mutual Fund. So that explains why, in fact, the stock, after losing a goodish bit, remember, had a big run. It was put in ASM, that's the surveillance measures. And today, there are meetings in Mumbai. A whole host, Goldman Sachs as well, is included in that list. So maybe, in fact, there is some movement on the back of that. It's on the BSE as we speak. Stock in upper circuit as we speak. But we slip into a short break. On the other side, as promised, we'll give you a recap of the first half of 2018.
Welcome back. It's the last trading day of the first quarter and the first half of the second quarter and the first half of this calendar year. Nigel is here to take us through the market performance.
Well, just put together today's good performance of around 90 points approximately, and the Nifty has bounced back. So for the first half of this year, well, the Nifty has put on roughly around 150 points. Till the start of today's trading session, it was one of the worst starts to the year because, in fact, it was up only around 50 points for the year. So it was almost the worst start in the last 5 years odd. But remember, there were plenty of challenges. Domestic front, you had LTCG that was introduced. Then you have the Nirav Modi saga that played out. And suddenly, in the last couple of weeks, we've had these auditors resigning, as well as the ASM measures that have soured sentiment, particularly in the mid-cap space. The FIs last year at the halfway mark, they had pumped in nearly around $3 billion. This time around, at the halfway mark, they have sold nearly around $4 billion, telling you that the FI selling is something that's really hurt the bulls. Well, global challenges as well. The Fed rate hikes have been coming about. The dollar has shown some strength. Money moving towards developed economies. And Trump's tariff war cries, that's something as well that has hurt sentiment. Remember, the rupee has breached even the 69 mark. Now, that's the lowest levels we have seen in the recent past. And the biggest worry has been that crude oil prices continue to hold above that $75 on a per barrel basis. Well, the total market capitalization that's been lost on the BSE listed stocks is nearly around 9 lakh crores odd. But we're talking about India. Let's compare us with the rest of the globe. Well, in terms of the US markets, are more or less flattish with a bit of a negative bias on the Dow, while the Nasdaq has been a relative outperformer, maybe because of those FANG stocks out there. While the European markets as well, more or less flattish is what we have seen. Some of those indices have got hit, like the DAX. That's down nearly around 5%. But when you're talking about India, you want to compare us with the emerging markets. And let's see how that really stacks up. So in the local currency, if we look at it, India is a relative outperformer. In fact, we're up close to around 1.5% odd. But if you compare us in dollar terms, that's what the FIs look at, right? So the Brazilian index in dollar terms is down 20%. Keep in mind, the local currency, that's the Brazilian real, has seen some kind of depreciation. So that's what's hurt them. And even if you take a look at the other couple of markets as well, the losses are far more because we have seen strength on the US dollar. And that's why the Nifty as well, in dollar terms, is lower. Plenty of sectors that have been losing out. You have the PSU banking space that have got hit, the realty, the metal index. They are part of the losers. But there have been as well a few gainers. And the star performer really in the last year has been the IT space, the tech space. Just take a look at that. Big gains is what we have seen. A relative underperformer really has been Wipro. That, in fact, is sitting with a bit of a cut in this year. That's the first half of this year. But otherwise, ID stocks, they've done quite well. Let's run you through a few of those gainers then that have done pretty well in this year. You have some of those broader market mid-cap IT stocks as well that have given you returns between 30 to around 60%. NIT Technologies in there with a gain of nearly around 60% approximately. But from the Nifty pack itself, besides the ID stocks, quite a few of those stocks have done well. So you have Asian Paints, your big boy HDFC, and even Kotak Mahindra Bank. That's given you returns in excess of around 30%. But there have been some stocks as well that have been relative underperformers. Tata Motors, that's lost its way. 35% of the market cap has got eroded. A couple of those metal stocks as well, like a Vedanta, has lost nearly around 30%. And UPL, suddenly that stock finds itself at a 52-week low in the last couple of days. But let's shift focus then to the broader markets. There have been plenty of gainers. So Jubilant Foodworks valuation, well, that was a concern, but the stock has done very well this year. It's up more than 50%. Britannia as well is up nearly around 30%. And JSW Steel, that one, while other stocks were seeing some selling, that's sitting with a gain of nearly around 20% approximately. Well, if you got it wrong, then you got absolutely hit. PC Jewelers, HCC, irrespective of what the move is today, PNB, all of them down between 50 to around 70%. But if you really got it wrong, then you got hit very, very hard. The likes of Manpasand, Gitanjali Gems, you have Karangi, all of them have seen a sharp knock. Before we wind this down then, the first half of the year, well, it's not been that great. We're up 150 points approximately. More pain been seeing in the mid-cap stocks. But traditionally, the second half of the year has been a tad bit weaker than the first half of the year. 2014, for example, we put on 600 points in the second half of the year. The first half of the year, we were at around 1,300 points. And in fact, other details as well suggest that the second half of the year is a tad bit weaker than the first half. This time, let's see what happens. We're up 150 points till now. Back to you.
Thank you for that neat summary. Get into a break. Then gold is under pressure from a strong US dollar.
Welcome back. And while everything has been quite volatile in this weekend quarter, but gold really deserves a mention because we have seen prices decline by 8%. And this is perhaps the worst monthly decline that gold prices have seen since November 2016. The buying in Indian markets also has been on the weaker side. And let's get a complete 360 degrees idea from Surendra Mehta of IBJA, who now joins us on a phone line. Mr. Mehta, hi. Thank you so much for joining us. Of course, the global markets are doing what they are doing. But what's your sense on the Indian prices? The rupee depreciation has been a cushion. But is there buying really at these levels?
Absolutely, Manisha. There is a sharp decline in the gold buying in the last almost 2 months now. The decline in some of the retail stores is as much as more than 60%. And which is a really bad scenario for the Indian retailers and Indian market. Internationally also, the gold prices has been constantly going down, and people are actually, the buyers are actually looking at the international prices, and the rupee depreciation has further added fuel to the fire, and that is why even the investors and consumers are keeping themselves away from the buying.
So what is the sense, when you say that the last couple of months have not been good, is there a percentage on how much decline gold buying has seen in the Indian markets?
According to our analysis, the gold buying decline has been as much as almost about 40 to 60% in some of the retail segment, and in the wholesale segment, the decline is about 30 to 35%, which is normally not seen as far as the gold market is concerned. But this is something unusual happening. It looks that the market may not revive in the near future unless the rupee settles.
Also, Mr. Mehta, there have been reports on how the Indian jewelers are offering discounts to the global prices to lure the Indians here. This perhaps is a 10th straight week when we have seen that much happening. What is the discount right now prevailing at?
Currently the discount is about $2, so which is almost about 40 to 50 rupees discount is available in the market. See, one need to understand that the gold prices have dropped in U.S. currency, in U.S. dollars by about $62 in last 12 trading sessions. Now, which is a huge drop as far as the gold prices are concerned.
Yes.
And that is one of the reasons there has been discount in the market. Also, the CFTC report, that is Commodity Future and Trading Commission report from the US, says that last week the hedge fund and other speculative traders, they have cut their bullish bets by 11% and have grown their bearish bets by about 60%.
Sure.
Now, this kind of data are not at all good for the market, and it is going to increase the discount, and it will not help the Indian market too.
And the Indian buying has gone down by half of what it normally is the view coming in from Mr. Mehta. Thank you so much, sir. All
right. Thanks so much for that, Manisha, as well as Mr. Mehta, for joining and giving us those details. On that note, we'll wrap up on Halftime Report. You stay with us because Business Lunch comes up next.